Truth be told, Mali,
Uh-huh.
financial freedom isn't about how much you earn. It's what you keep and how you grow it.
Is that saying it's not an income problem? It's a spending problem.
Pending problem.
Hey, tuko na shida. Welcome to the Truth Be Told podcast. My name is Malem Toto Mwanza.
And you may call me Charlene Kimara, aka Mama Bima Kenya. And today on the TBT podcast, Mali,
Yes.
we are joined by a girl, Mtaani.
Uh-huh.
You share a middle name, tunamuita Toto. But for today's purposes, she is the founder of the Financial Fitbit, the lovely, the amazing Lynn Musisi. Welcome to our podcast, Lynet. Please introduce yourself and meet our audience.
Thank you so much, Charlene. So my name is Lynet Kyalo. I run a financial wellness consultancy firm called the Financial Fitbit Consultancy, where we primarily help people grow, manage, and protect their wealth. Yeah.
Fantastic. And, just tell us a little bit, because anytime I hear the word financial coach, then there's financial advisor, then there's what? Financial?
Director. Yeah.
Could you just define for us exactly who is a financial coach? What do they do? And just go a little bit deeper for us. Like, what do you really do at the Financial Fitbit?
Okay. So I don't go by financial coach or financial advisor. I go by a wealth advisor, because that is what I had studied in university and also did a certification in wealth management.
Okay.
So, and also my master's is in investments. So I go by the name a wealth advisor.
Yeah.
So primarily I just help you grow your wealth, and also I'm also now introducing the aspect of protecting this wealth that you're building. So when it comes to growing your wealth, I help you also identify the investments product that are available in the Kenyan market. Help you also understand these products. Then see how fit these products are also in tune with your financial plan. Then at the end of the day, I also do the other work where I understand the markets. I see how the markets are moving, because also the products are in line with the market, like the Kenyan market or the US market. Now, depending on the product that you take. So you'll find that majority of the clients who come to me, they don't have that knowledge of the US market. And also they don't know how to, how can I put it? Understand the news that is there and see how it's going to affect their investment. So that's the work I do. So you'll find that every morning I will listen to Bloomberg, Sky News.
Oh, wow.
So as to see what is happening in the global markets, because some of my clients are also investing in the global markets, so that I'm able to now advise them further, so that even when we're having the follow-up meetings, I'm able to tell them, okay, fine, I think we need to change where you're investing. Let's move to this asset as opposed to this assets, because this is what is happening in the global markets and it's going to affect your portfolio, things like that. So that's why I go by a wealth advisor, because it's more than a financial coach and it's more than a financial advisor. Yeah.
Oh, wow.
Okay. So wealth. Okay. This question was not on my notes, but
Yes.
this thing of wealth, is there an age thing here?
Not necessarily.
Yeah.
I think when you start working or when you start earning money, you're supposed to be thinking about the aspect of building wealth.
Yeah.
Yeah. So even if in your 20s and you start earning money, the aspect of building wealth has to come in play, because you're not going to work all your life.
Yeah.
You'll reach a point where you're 60 or maybe 50 and you want to retire, like you're tired of working. So then this money that you have been making has to grow for you, so that when that time reaches, you just sit down and you watch your investments bring you income. Yeah.
So the earlier you start, the better.
Yes, the earlier you start, the better.
But I can't shake off that feeling that, especially in our country, that the wealthy, there is an age. If you are young, we start saying things like,
Accumulation phase.
Yeah, something somewhere. So yeah, how do you go about that to convince? Because you have to start early, but we have the mindset that it comes at a certain point of life.
I think that has to do with unlearning. Yeah. Because also you'll find one of the things that I've also seen is people don't focus ahead. So people will rarely think about retirement. So they'll think about now. Even the investments they're putting, it's right now, I want an investment that earns me income right now. So they will not think about, does this investment, will it be able to generate for me income 10 years from now, 15 years from now? Yeah. So I think it's more about unlearning the aspect of wealth is for the older generation or people late in their 40s, or when you're almost thinking about retirement, and also now starting to think about, I'm 20, I started earning an income. Can I start building wealth right now? Because the earlier you start, the more advantage you have. So for someone who maybe starts at 20, they don't have to put in a lot of effort. You see someone starting at 40 will be like, I need to now put in a lot of effort because I'm almost retiring. Yeah. And you see, even when you're 40, you have so many obligations. Yeah. So the earlier you start, the more benefit you get, advantage you get. And for someone who starts in their 20s, they can be able to say at 40, I'm going to retire. Yeah.
And I love that, Lynet. And I love that you have brought this in, from my first salary, I should actually start setting something aside and investing and starting this whole journey of building wealth. But I'd want to hear from you. When was your first maybe investment account opened? And at what point was that investment made?
I think I was young. I was about I was still in primary school, that I can say.
Yes.
But I can't recall when it was that. But if you remember those days for cooperative and jumbo junior accounts.
Yes.
So I was one of those people who had like a piggy bank.
A pink one.
A blue one.
You had a blue one.
I had a blue one.
Okay.
Yeah. So that's when I started. That's now my earliest recollection of when I started now saving, because I remember us going to Splash every December and our piggy banks being open, and they count your money, they put it in your bank account and things like that. Yeah. So that's actually my earliest recollection
Of money. And I think yours is a really beautiful story because you are, you've been fortunate to actually be brought up and taught about money, taught about building wealth. And we saw you straight even from college, getting into the investment space. I remember the reason why I like to call Lynet Toto is when she first came for her internship, we were working at the time at an investment bank. She came wearing a yellow top, and was it flat?
I don't even remember, Charlene.
And that first day, HR even had to tell her to call her aside to just tell her on how people dress in the office. But from day one, she was this really tiny little girl, straight from college, fresh. But from day one, she got into the business, and she is not, and I love that. I love that you've even been able to differentiate yourself as a wealth advisor or a wealth manager, because yours is, I know you still do handhold us. For example, the budgeting template that I have, yes, it's actually courtesy of you, it's your work. So she still does the financial wellness stuff, but over and above that, Lynet understands the markets, the investment counters, investment opportunities, both locally and offshore, at the tip of her hands. But it's more than just understanding theoretically. She actually practices. This is an investor.
Oh, nice. Okay. Now, from a wealth advisor perspective, do people trust older wealth advisors, or how do you go about that?
Well, I think it's all dependent on the client. Yeah.
Okay.
And also how you're selling yourself.
Okay.
Yeah. I think that's what stands out for me. I think how I sell myself and also how I back my credentials. Yeah. Because mine is not YouTube. Mine is, I've actually gone to school, I've studied it. And so even whatever I'm telling you, I've actually studied it. So I can back that up. Yeah.
Okay. So,
Yes.
so it's about credential.
Yeah, it's about credential.
And how does someone get a wealth advisor? How do you procure the services of a wealth advisor?
Yes, and do we pay like a retainer, monthly retainer? Yes.
Wow. So I don't know. For me, it's dependent.
Yes.
So for me, it's not one. I cannot say that all my clients have the same cost. So what I initially do, I do a needs analysis session. Yeah. So I'm also able to understand this client as an individual and what they hope to achieve. Yeah. So there are those clients who they've already built a wealth portfolio. Maybe they are just investing in bonds, investing in shares because they've had, okay, someone has invested in it. So for them, it's more about structuring. So for them, the cost might not be as much as someone who's also starting the journey, who has no knowledge of these investment products, who has no knowledge about how their cash flow statement is, who has literally no knowledge. Yeah.
Now, Lynette, we are halfway through the year. It's June, literally the last week of June now. I want you to wear your financial coach hat for a minute. So what are some of the questions that, we should be asking ourselves at this point? What are those powerful questions? Because at the beginning of the year, a lot of us, myself included, I put up a really good vision board, set goals also for the year. What are some of those financial questions that I should be asking myself or checking in with myself at this point?
Well, I think you should go back to now. Let's say, like, we're using you as an example.
Yes.
You need to go back to your vision board and see how far have you gone with each image. Is it yours? Was yours an image?
Yes.
Yes.
Image.
How far have you gone with each image? Or even if you've written it down in a book, like how far have you gone
Yes.
with every entry you made? Like you said, like by the end of the year, I want to do this. So how far have you gone with that? If you've not gone any far, it's also for you to ask yourself what happened. Yeah. Because sometimes also life happens, and we know in this country we are in some uncertainty.
Yes.
So even you're supposed to call yourself for a meeting and ask yourself, okay, yes, I wrote this down.
Yes.
What were the reasons that I have not been able to action it? If you've been able to action it, also sit down and ask yourself, what made me action XYZ? Yeah. And what is the progress? Yeah. I think that's key. That's key. Yeah.
Yes.
And you're also supposed to look at different aspects.
Yes.
You look at in the aspect of investing,
Yes.
the aspect of also retirement planning, the aspect of protection, that means the insurance aspect,
Yes.
and then the aspect of just how you have been maintaining your money, your cash flow statement. Yeah. So you can just focus on those areas and ask yourself, in January, I was here.
Yeah.
Okay. Maybe you wanted to start taking up life insurance. So have you even made the effort of getting in touch with someone who will take you through the product? Because you don't necessarily have to buy the product, but it's the knowledge. You're walking that journey and you have to start from somewhere. So you have to ask yourself, okay, fine, that was one action point. Did I even make the call? Okay. Did I sit down with someone to advise me on it and things like that? Yeah.
Okay, so you've said it's good to be checking in on investing,
Yes, the investing bit,
the retirement
the
planning,
retirement planning.
the protecting bit, and also like your budgeting.
Yes, basically your cash flow statement, your income versus your expenses.
Yes.
So you're earning this income. What are you spending it on? Yeah. So you also evaluate that. Yeah. Because sometimes people say they don't have money, but then when you look at the cash flow statement, the expenses, you're like, okay, you actually have money.
M-Pesa statement.
Yeah, M-Pesa statement.
Realize that.
You're like, you're a millionaire, so
Yeah.
you can't tell me you don't have money.
Or your P9. We actually
Yeah.
had that period of declaring.
Yeah. Yes.
Okay. So, following up with Charlene, she's asked, we are midway, there's this, you've evaluated, you've seen what you've not done, what you've done. How do you course correct? What are like some high impact things you can do between now and the end of the year?
Yes.
'Cause I know sometimes these conversations, they sound very lofty.
Oh, yeah.
They sound like how investments, nini vitu kubwa kubwa. What are these some of simple things that you can do that are high impact between now and the end of year?
Yes.
That can change the narrative financially?
Okay, I think the simple one is to now you've reviewed your goals. Maybe you've seen maybe these ones are not working. So you can set realistic goals for 6 months.
Okay.
And realistic, I mean really realistic, because you're the only one who knows your income statement, your cash flow statement. You're the only one who knows your willpower. Yeah. So you also sit down and say, even if it's saying that you're going to save 30,000, yeah, but you have the potential of saving 100, but then you just say, I just want to do 30, yeah, then just do it, yeah. Don't make ambiguous goals, but just make the small and it's achievable, yeah.
Okay.
Because when you start doing that, you're actually building the muscle, yeah.
Okay.
Because you're like, okay, I've done 30, okay, fine. So now I can be able to do maybe 60 and things like that, yeah.
Okay, I love that. Still,
Uh-huh.
keep the hat, because let me tell you, sometimes budgeting really feels like a a constraint as opposed to a tool of freedom, the way we look at it. Hypothetically speaking, if I take home about 100K, Lynet, and say I'm a mom of one, I'm taking care of my home with my spouse, but first I want first to budget save for my 100K. Where do I start, by the way? Do I go create an Excel sheet? Do I take a book? Where do I start? And how can I ensure that process doesn't feel so daunting and I don't get that mental block that, because I think budgeting, you get this mental block until you do not even want to look at where your money is going. You get. Where does someone start with a hypothetical 100K income?
Okay, fine. We won't even think about the hypothetical part because you mentioned also budgeting sometimes feel restrictive.
Yes.
So the first thing I usually tell someone is review your expenses for 3 months. Just sit down and review. Even your M-Pesa, just see where your money goes, yeah? So it will give you an idea of who you are as a person, yeah? Maybe you like eating out, yeah? Maybe you like buying random clothes, yeah? Maybe you like sometimes just going on a spending spree, yeah? So evaluate that, then note those things. So also in your budget, try and include those aspects. Try and include those aspects of eating out. Try and include those aspects of maybe spree shopping, going to the mall and just buying, treating yourself, trying to include those aspects into your budget because that is who you are as a person.
Yes.
Will it fit in the budget?
But you see, if you have managed like that, that means it's fitting.
Agreed.
Yeah. So then now review all that and start also including that in your expenses, yeah? But then now, since also you want to also start building wealth,
yes,
don't put an ambiguous amount, yeah? Maybe you've seen that you do impulse buying and it's costing you, let's say, 20,000 a month, yeah?
Yes.
Now, work with a feasible number because you're also trying to enjoy it and not limit yourself, but also you're trying to also grow your wealth in other aspects. So instead of putting like 20, start with 10 and tell yourself, this month I will only impulse shop 10,000. Yeah. So it's like you're taming yourself, but you're still enjoying whatever you're doing. Yeah, which is impulse spending. Yeah. Then the other 10 can find other sources. Yeah. So you'll find that other 10 you can use for investing, you can use for also building wealth and things like that. Yeah. So always try and just review your budget and then see these are the expenses in 3 months. So that means that is who you are as a person.
Yes.
So also try now and incorporate that in your budget. So you'll find your budget is not restrictive, but it's also accommodating you. At the end of the day, I usually say, you earn money and you have to spend the money because it's not always about investing, building wealth, but you also have to enjoy this money that you're also making. And then those little pockets that you see in your expenses also, those are now the little pockets of enjoying life. And you also have to factor that in your budget. Yeah.
And I love that. So Mali, you're getting this. Before you even go into the actual budgeting, so you start with tracking your expenses, say for 3 months, to better understand yourself and your spending habits and to also accommodate,
those habits
that you love as you tame them.
Yeah.
And I think that's because I think also money management, a huge part of it is actually emotional.
Yes. It is a huge part. And we are emotional beings. So sometimes, and also majority of my clients are women. Yeah. And women, the way we like just, umekasirika, you're like, oh my God, I need to go to a mall and buy a shirt or I buy a dress to make me feel, and you'll feel happy after it, right?
Okay.
So also incorporate that in your budget. Incorporate that, yeah. So that you don't feel like all you're doing is just,
What do you call that line? Feel bad Friday.
Yes.
So Friday or something.
Yes.
Okay, I agree with you. And the Bible does say, where your treasure is, there your heart will be also. So if you go through your budget and you see where your spending is, then you'll get to know where you actually, the person that you are. So I hear you. You're telling us to even budget for our so-called sometimes bad or good habits. But how does that give comfort? Because wealth structure building has an element of kujinyima. It has an element of denying yourself some pleasure. So how do we get a balance between that?
So it all aligns with your goals. Yeah.
Okay.
What goals do you have? Like, what are your goals in, let's say, 3 years, 10 years, 15 years, 20 years? Yeah. So it all boils down to your goals. Yeah. Then you align also your budget to that. So even if you're overspending, you're aware that I have a future goal. So I cannot overspend to this amount. Yeah. I cannot feel good to this amount. Yeah. Feel good Fridays. I can only do it to this amount. Yeah. So you have given yourself a limit. Yeah. I can only go out. I know I can go out every week, but because I have a goal, right now I can only do 2 weeks in a month.
Okay.
Yeah. So it's all about finding the balance. Yeah.
Okay.
Okay, I love that. Honestly, I love the flow of this. Now, tell us, Lynet, what is that one money myth that you'd want to cancel today?
I think you need to be rich to build wealth.
Okay. First of all, there's a difference between
I love it.
rich and wealthy. Is that what you're saying? Because you have to be rich to build wealth.
Is there a difference? I think, yeah, there is a difference. Yeah.
Okay.
So being rich, you can be rich and not wealthy. Yeah. You can be earning millions and millions of shillings, but you're not wealthy. Yeah. You don't have, like, you're not thinking about the future. You're only thinking about now. Yeah. So it's all about the now, but not the future. So what happens if this richness ends? Yeah. Because we all know life is a cyclical. One time you're up, one time you're down.
Yeah.
So what happens when the down happens? Yeah. Because you've not used the rich money to build wealth, so that when you're down, the wealth that you're building is also putting you at par. That yes, you're still rich, but now you're on a down. Yeah.
Okay. Nice. Nice.
But also tell me, at entry level, I've just started working. I love that you are a wealth manager, right?
Yeah.
Wealth coach.
Yeah.
No? So now I've just started out because I would imagine that the bulk of your clients are younger Kenyans who really, but then the other thing that we haven't mentioned, Lynet has a very huge and credible platform online. She is big. You just need to check her out on the Financial Fitbit, on pretty much every platform, right? Whether you're thinking of LinkedIn, thinking of IG, Facebook, right?
Yeah. Ish.
Yeah, Lynet is there.
Kuna wealthy people.
Yes. So, of course, I want to imagine that your clients are also younger Kenyans, right? Who are keen on building wealth. But what is the entry level? Like you talked of investing offshore, investing locally. And I want to believe even the opportunities that you give to clients about, say, shares trading, possibly bonds. You can always tell us the kind of assets or counters that you offer now. But what is the entry level? Is it 10K? What do I need to have to get started? Is it 1,000 bob? Is it 10K? Is it 100K? Is it 1,000,000 bob?
Okay.
Yes.
So I can say minimum to start investing is 100 bob. Yeah.
100 shillings.
100 shillings.
Wow.
Because it all boils down to the investment vehicles that are there. Okay. Yeah. So I know there's this myth that says you can't use a money market fund as an investing product. Yeah. But ideally you can use a money market fund as an investment. Yeah. With the end goal of you're building capital so that you can live off the interest. So ideally what the money is doing, it's working for you. So you can find someone, let's say hypothetically, who has a portfolio of 4 million, will be earning 40,000 or 30,000 each and every month. So they're building wealth. So they're using the money market fund as a tool to build wealth. Yeah. So it's not acting not as a saving product, but an investing product. So you can start with 100, just lock money in a money market fund, build the capital. Yeah. Build the capital. And be consistent. Reach a certain number, start earning the passive income. This interest payment, you can channel it to something else. This interest payment can be paying maybe, I know I'm diverting, but this interest payment can be paying maybe your premium, maybe for motor insurance each and every month. Yeah. It can also be paying maybe your medical insurance each and every month. Yeah. So it's all about just finding the investment vehicles that are there and customizing it to meet your needs, not what you hear around social media. Just find an investment product and say, this is an investment product that I'm using to meet my needs and my future goals.
So you're saying there is no excuse for not investing.
Yes, there's no excuse.
If you can start from 100, Bob, really, Mali.
You start now.
Yeah.
Okay. Sorry, can I divert?
Yes.
Okay.
We went into wealth very quickly.
Yes.
Tell us about Lynet. When did you start? You've told us there was the initial one when you were a child, through your parents. How was it growing up? When did you start having a passion for this? Is it something that was talked about in the family? And I asked this in the light of we had a game. We played a financial Fitbit game here.
Yes.
And she's the creator of the game. You can tell us about that.
Brilliant.
And
Yes.
the goal that we had in that episode was to bring out the fact that if you don't talk about money conversations at home level, at relationships level, then you will miss it out. And most of us don't talk about it. So you can tell us about that, how you grew up and how that became part of who you are now.
Okay. So I attribute my money knowledge to my father. So my father, okay, now he's retired. So my father, okay, let's say we say was or is, but I guess he still is. Yeah? My father is an economist, So he used to work with the government and he was a chief economist, So for him, money conversations were a norm because that's what he was doing on a daily basis, helping the government budget their money and things like that. So then for him, it was a norm to have these money conversations at home. So he used to be those people who, if he doesn't have money, by the way, he'll tell you, I don't have money. And he'll explain why he doesn't have money. So it's not that he's nyimaiing you, but it's like, I don't have money. And he'll also lay it on the table because I have school fees to pay, I have rent to pay, I have my parents to look after. So even when you're having those conversations, you're like, wow, akona expenses mingi, kweli hana pesa, you know?
Yes.
So those conversations we grew up having them.
Yeah.
Then another thing he did is used to take us for shopping, like family, like when you're going for shopping, like buying household, we used to go as a family, mainly because he wanted us to learn. So he used to be those people of, before we go for shopping, we sit down and we write a list of what that is not there in the house. So we sit down, we write. And he will ask you, do you have anything you want to add? And being as a child, you'll be like, no, iko sawa. He'll ask again.
Every time.
And he'll be like, are you sure?
A different child.
So he'll be like, is there anything else? So if you have anything, you'll be like, yeah, let's add this and this and this.
Okay.
Yeah. So then we go for shopping. And kids being kids, you'll see a lollipop, you'll see something, and you'll just put it in the trolley. So that time he's just watching you. So when you go to the counter, he asks you one question. Now, when you're removing there, he now puts them aside.
Yes.
And he's like, yo, I'm not paying for this. I have the money, but I'm not paying for this because when you were at home, I asked you,
Do you want
anything?
Aye.
And he'll tell you like, next time, please remember to add it. If you don't remember, it's not my fault.
Too bad.
It's too bad, yeah.
Okay.
So also those money conversations we had also growing up. And also all the investments he made, he used to tell us. He used to tell us, oh, there's this investment I'm doing and things like that. So that's also where I sparked interest in. And I remember when I finished high school and I was doing an undergrad, I wanted to do economics because I wanted to be like my dad, But then I remember him telling me, you need to do something else. There's Become Finance, which you can do. So that's now how I ventured into Become Finance. And then the interest came about, Interest came about me hearing him talk about how the economy is doing. Conversations like this, I was like, wow, this is really interesting, Me seeing him making the right investments, so I'm like, wow, this is actually the right path. So that's also how I did now my Become Finance. Finished, then I got employed. I met Charlene Kimara. Then now after that, now I did my master's. Now I did also my certification in wealth management. So for me, it's more of a passion. And I remember one thing when I was working in investment banking with Charlene, I used to be at the customer service, yeah.
Yes.
And you see, some people used to ask me, people used to come, but then the questions they're asking, I'm like, ay, nyinyi hamjui hizi vitu. Like, I'm like, hamjui ku budget, like, hamjui ku save.
Yeah.
You know, even money market funds were there from time immemorial, yeah? So even when I'm seeing money market funds blow right now, I'm like, yo, these things were there, like, even in 2014. Where were you guys? You know? So every time people were coming to the teller, I used to, like, wonder, why don't you guys know these things? Me, I know them. Like, how, like, what is not happening, yeah? So I remember one time I went and told my dad, me, I don't understand. What huku nje ni kama hawajui hizi vitu. So my dad was like, you see, it all depends with how people have grown up, who are their surroundings.
Yes.
So I remember him telling us that us, we are beneficial because for him, he also studied it.
Yes.
Because now he told us, now imagine if I had done a different course apart from economics, I wouldn't have the knowledge of money and money management, yeah? So you'll be like those people who you're wondering, hey, mbona hamjui hizi vitu? Yeah.
And I hope you realize this is what a 20-year-old, 21-year-old sitting, a teller at an investment bank. You're basically seated at the front desk. You're probably 3 of you. And these are investors coming in with their trades for the day, saying, maybe I want to buy this shares in this counter. I want to sell this one. So you can imagine maybe at 20, 21, already wondering, can you guys
I get it.
Yeah.
I mean, it talks of a parent who really took time to ensure that the kids, like, they walk that journey, that money journey with the children. I think your dad did a fantastic job. And Mali, a challenge to you and I.
Agreed.
We are in this business. Are we having the right conversations?
Are you giving Daniela the freedom? The freedom to say unataka nini? Weka hapa kwa budget.
I have learned something from home because she hijacks me. She hijacks shopping every time we go, and I think that's really important. From the get-go, you go with a list properly drawn out. I think it just even inculcates discipline.
Yeah.
And the practices come to that level. I think it's just as simple as that.
Yes.
What am I going to the supermarket without a list?
Yeah.
Yes.
And does my family get involved in it? And I think most of our parents and most parents in the society, finances is a secret. It's their deal. Whether they're doing well or not, it's their deal. And the parent or the children or the family is not involved. So I think I'm hearing from this that there has to be some certain level of involvement that is there. And investments. What investments have you done? Is your family aware that you are doing these investments? Is it going to benefit them? Are they made known to them so that they can also start at an early age? You are clear what money markets were.
Yes.
Okay.
And also, I'm also hearing a bit of taming, like those habits. Like for me, I think it's the emotional part of it. I don't know. At this point, people will just think I'm the poster child for poverty. But like, I'm at a point where, at least right now, because I have something.
Kakiru.
Mimi nikiingia supermarket na mtoto wangu ataona toy ya 7,500.
Asisumbuke.
Budgeted,
Yes. Buy that thing.
Even if daddy was the one shopping. And I know ataleta shida because we picked something ya 7. It's a toy that has what a mermaid. Then we go open it and there's nothing. We buy.
Yeah.
And at that point, like my hubby, like he can't wait. By the time you get home, he's like, open that thing.
It's serious.
Stickers and just like a mermaid fin and, nothingness, honestly. And really, it's talking to me about taming probably that, the little child in me.
Yes.
There's something that my hubby always says. He tells me that I live like my younger life through my daughter.
Yeah.
I've also told you that.
Yes. If she said, Mommy, let's just buy that thing worth 20, like, I'm like, okay, sit there. It's okay, let's take it.
Yeah.
Probably there's also a younger girl, a younger child in me who did not even have the opportunity to get into that supermarket. And at this point, when you see it, and you hear now, but you see, what am I doing? I'm becoming now an enabler.
Yeah.
And possibly now not teaching my little Toto Bima that, yes, money may be there. I loved what your dad would tell you when he would put aside the lollipop. it's not that you don't have the money,
Yeah.
but you didn't put it
Yeah.
on the list.
Yeah.
You know, I love that.
And it helps our generation now. A lot of parents are what aiding this behavior because we lacked. Now I want to make sure that
yeah.
my
Don't
children
lack.
don't lack.
Yeah.
And with that, we don't teach them the financial discipline that got you to where you are. And it started late for us. Very late. It started late for us. It needs to start early. So I agree with you. So, Lynet, what was your first investment? Beyond the Jumbo Junior
Not the Jumbo Junior,
elephant.
a blue elephant.
I think buying shares.
Okay.
Yeah.
How old were you?
Let's see. It should be, I was still in high school. So let's say around 2011.
High school, you were buying shares.
Yes.
Okay. Was this advice from your dad? or-
Yes, it was.
Okay.
It was.
And money from your savings?
Yes. When you go to high school, you're given some allowance, some pocket money.
Yes.
So it was that pocket money, yeah. So because I think also one thing he used to do is, because the pocket money was left with the bazaar. I have short recollection of high school. So the money was being left by the bazaar. So each and every term, you needed to now replenish that account. So
Yeah.
before even he replenishes that account, you need to show him how you spent the money that he left there before. Yeah. So if there's a remainder, he will maybe tell you, okay, fine, I'm giving you X amount, but can I use half of the X amount to buy shares on your behalf? Yeah.
Oh, wow.
Yeah.
And you agree?
You can't say no. You're just there, you're like, okay, sour.
I'm trying to think of the pocket money I was getting in high school. There was no way it had any extra to do any investment. But that's quite something. And how has that grown from high school now coming into who you are, the person that you are now? How did that help to the person that you are now?
I think having started building that habit then,
Yes.
for me, it's more of a muscle. It's something that I do every time, yeah? So dependent on how much income I make, X amount has to go to an investment. Even you'll find the way I charge my clients, X amount of that fee goes to now my company because I also want to build wealth for my company, yeah? So if I'm charging a client, let's say 6,500, I'll use maybe 2,000 to buy shares or 2,000 to put in the money market fund, yeah? Yeah.
I like that even the pricing has an element of
Yes.
investment.
Yes.
Okay.
And it's actually paying yourself.
Yes, it's
Before
paying
you're
yourself
going
first,
to
yeah.
expensing on other things, you pay yourself first. Tell us, Lynet, what's the best money advice you've ever gotten? And maybe what's also the worst money advice you've had been given out there?
The best is just start, yeah, and don't overthink it. I think that's the best, yeah. Because also me, sometimes I feel like, okay, yeah, sometimes I feel like I can't be able to do that, yeah. So I look at my finances, I'm like, I really don't have money. And you see, my center, person who centers me most is my dad. So sometimes I go to him and he's like, you just start. Why are you overthinking this? Like, even if you don't have, just now build that portfolio where you can now be able to invest in that investment asset instead of you pushing it yourself back and saying, when I get maybe that amount of money, I'll start. But now building a portfolio where I can just pack in the little money that I have, when just that amount, I can be able to now invest in the asset that I want. Yeah.
Oh, just that.
Yeah.
And I think
that?
that goes beyond just finances. It
Yeah.
goes to life. In all the conversations we've had here,
Yes.
whatever goals you have,
Yes.
just start. But as little as 100 shillings,
Yes.
and you've started off.
Yes.
How big has this high school share thing grown?
It's big.
You can reveal.
Yeah. You can come for me, but
Okay. What you can tell us, Lena, is maybe it started out as the share was 10 shillings, maybe now it is grown to 100. Is that something you can tell us?
Oh, she's an avid investor. She's not out there holding for 10 years. 20 years, same counter. She's buying.
Oh, you already moved up from
selling.
that one.
Oh, by far.
Yes.
Bought, sold, bought again.
Okay.
sold.
Okay. Interesting. Okay.
So now, Lynn, can we go into a quick what would we call it? Rapid fire Q&A. Okay. Savings account or SACCO?
Savings or SACCO? So I'll go with both, yeah. And I know there's this, people have talked badly about savings account, but I'll go with both, yeah. Mostly because I'm looking at the person who wants to save, but they are not able to hold money for long. So for them, they will save, but they will withdraw the money, yeah.
Yeah.
So, and there are no avenues that help you, that really lock your money for a specific period of time, as opposed to now, a savings account. So for them, I will say savings account for them, because for them, it's not all about the interest that they are getting. It's more about, I want to build this saving culture. I want to put money aside, even if it's kidogo interest. I'm still building that culture because I know myself, yeah. If you tell me money market fund, kesho nitasikia sherehe, I'll be like, withdraw all the money. Yeah. So it's moving one step forward, another step backward. So I'll say savings account for them. SACCO is good. SACCO is good, especially because also the cost of living has gone up. People have big dreams and you can't approach a bank these days for loan because it's also expensive.
Yes.
So the easier way is to start saving in a SACCO. Yeah.
For development loans.
Yes.
Okay. Investing in land or stocks?
I can say both.
Okay.
I can say both because also land has its advantages if you do it right. And there are people who have made a lot of money investing in land. And saying investing in land is investing in real estate. So you don't build that. You just don't have the piece of land here, but ask yourself, what am I doing with this land so that I'm able to earn income from it? Yeah.
Yes.
So that's why I'm saying that. Then you said shares?
Yes. Or
stock.
Yeah.
Stock.
Or shares.
Yeah. Also that, yeah. Mostly because also stock is a long-term thing. So you have to look at why are you investing in stock, yeah. Always have the why behind it, yeah. I shall tell people the reason why I'm investing in stock also for the Financial Fitbit is because I want a time when I'm paid dividends, I'm like, oh, my yearly trip is here. Imelipiwa na company. You see? Yeah. Okay. So also have the why you're investing in stock. So don't just invest because you've had people are investing. Yeah.
Yes. Final one, the rapid fire question. In your 20s, okay, typical 20-year-old Kenyan, 20s, spender or saver?
You're asking
speaking to the 20s.
I thought you're asking about me in my 20s.
Okay, tell us about you.
Yeah. We know she was saving. She was saving
I did
from
both.
16.
I think I did both.
Your recollection is wrong. I can speak on your the entire time. It was saver, investor.
I think I was also a spender, yeah. Mostly because I was earning my money and there's no one who had say with the money I'm making, yeah. But I also invested and I also saved. But I think if I go back, I'll tell myself that I wish I had saved more, yeah. Because I remember also that time the conversations we were having with my dad is that you're spending money a lot, which was actually true, yeah. So sometimes I feel like if I'll go back, I'll have saved more than spend more, yeah. Because I believe in my 20s I actually spend more than I save. People I actually did that, actually. Yeah.
Financial red flag in a partner.
Oh, that's a question for me.
Yes.
Wow. I think financial red flag in a partner. I think shying away from money conversations. Yeah. Because why are you shying away?
Yeah.
Okay. Need to ask these questions.
And it's actually a conversation.
Yeah.
Very few, I don't even know people who have these conversations. I hope really the younger people who are now coupling at this point, it's my hope, nowadays I even see there are all these IG pages, on relationships and and they even list for you some of the conversations you should have with your partner before coupling or before actually committing, saying, to marriage and everything. And really that bit of having a proper conversation around your money, your habits, maybe even what would happen if I lost my income.
Yeah.
And we were maybe now surviving on a one income, And by these are the things that we don't consider. Then now when they happen, when you're already there, you're thinking, Sasa, who you
this one is a burden.
and all of a sudden.
Yeah.
And then maybe you start seeing trends where people much later in life, like 10 years into the relationship, and now they're starting, to go separate ways. So yeah.
Okay. You work with many clients.
Yes.
What's one transformation story that you can tell us that can give us some hope?
I think my first client, I won't mention her name because I feel like she'll watch this episode. So for me, I can say my first client, working that journey with her until sometimes I tell my clients, I want to reach a point where I can let you fly on your own. So for that client, I've been able to see her until the part where she's able to fly on her own. So she's been able to build a wealth portfolio. She's been able to build a protection portfolio. And she even uptakes products herself. Yeah. She's like, I've bought this investment because I know why I'm buying it, because I know it's going to fit like this in my plan. In my future, it's going to look like this. So that's what I can say. Yeah.
Okay. Let's rush forward to December. Let's imagine we're in December. Okay. For people who are watching you now, your listeners, your clients, what would financial success look like? 6 months down the line, we maybe at this point, a lot of us are stock taking. We are definitely, looking back at those vision boards and all the goals that we set, but what can someone, what should we be striving for so that maybe by December we can say, okay, that wasn't a bad year. Like I made strides financially.
I'm trying to understand your question.
Yes.
But I feel like it all boils down to the goals you wrote and seeing how you've been able to achieve them. Yeah. So I'll give a simple example. Maybe you said you want to start building a wealth portfolio. So how have you done? How have you gone so far by December? Yeah. And there needs to be tangible progress.
Yes.
Quantify it by numbers,
Yes.
because wealth is all about the numbers and also the investments you have. So you're able to say, like, maybe I started, I said I didn't have shares in January, but now I can be able to say I have X amount of shares in this company and things like that. Yeah. So it's just going back and asking yourself, what is the quantifiable aspect in the financial goals that I set in January now when you're looking back till December?
And I love that in this conversation, we've been hearing a lot of shares, because when you think investing locally, we just think money markets. Do you get? Like a lot of people now are participating within the mutual fund space, but still very few Kenyans are actively, say, trading in shares. Now, we also know that a lot of people burn their fingers within the shares market. So what would do you handhold clients in this space? Like if someone now wants to start buying in shares, because telling me to pick the easy and trying to figure out which counter to buy, I don't know if I'm buying when it's at its peak, or it's at the bottom. I don't even have the time, or yet, especially at this infancy stage, I don't have the time to really sort of like stock like the shares market to know this is the time to sell, this is the time to buy. Where can I start? For somebody who wants to go into investing, where do I start? Okay.
So it's first understanding yourself as an investor. Who are you as an investor? So there is an active investor. An active investor is someone who has the time to do analysis of the market, go every day, see how the shares are performing. So they have that time. So for them, they are active. So for them, it's easy to tell them, okay, I'll educate you and you do X, Y, Z and things like that. Them, they'll be able to do that. So for them, that's okay. Then for even me as myself, I'm not an active investor. I'm more of a passive investor. So a passive investor is someone who chooses just, let's say, 4 stocks to buy and you accumulate on that. So you ask yourself, what is my end goal? My end goal is dividend payout. So I will look for companies that pay dividends and I'll accumulate on them each and every month. Yeah. So these companies have to be also top performing companies. Yeah. So you look and you're able to see mostly banks will always give you dividends. Yeah. So you now settle in banks and say, I'm going to buy maybe KCB, I'm going to buy ABSA, I'm going to buy Cooperative Bank. But also in your portfolio, it has to be diversified. So you just can't buy one counter because you're also trying to manage risk so that when one counter is up, then this other one is down, it balances off, yeah? So then also think of a counteractive counter. So let's say you now go into the energy, you buy maybe Kengen and put it in your portfolio. So all you're doing is you know that each and every month, I'm only focusing on those two. I'm focusing on my banks and I'm focusing on my counter stocks, yeah? Can be energy, can be any other, yeah. But these companies also have to make sense. Accumulate on that going forward. You can even do that for 3 years, 4 years, 10 years, yeah. Because also the companies that you have chosen, forward looking, you know these companies will always be there. Because even in the banking sector, banks are things like NCBA, things like KCB. The asset book is huge, it's profitable. So you just buy, forget. You know that once in a while, you just, every month, you just put in, it's 10,000, just accumulate. So you're doing what is called passive investing. Then there are those ones who don't want either being an active or a passive investor.
Yes.
So it's like Charlene is learning a lot. And I'm like, wow.
Yes.
So now those ones who don't want to be an active or a passive investor. So you find products in the market that where the underlying asset they're investing is in stocks. So you'll find that these products coming up in the market that do that, yeah. Underlying asset is stock market. So for you just give them the money. They have the knowledge, they have the expertise, they have the wealth managers, they have the people who are monitoring the stock market. So they do it for you. At the end of the day, you want to get your returns. So there's also that aspect, yeah.
Okay. Last question for me. Saving to spend or saving to earn? Which is which? Which one do you advise?
Remember I told you both of them are the same because you've said spending to?
Saving to spend.
So saving to spend, let's start with saving to spend. So saving to spend, that means it can also be good because maybe your spend is on an investment, yeah? So you see the way you have your cash flow statement, maybe a certain amount of it, you are allocating it to, let's say, money in a circle, or let's say buying shares, or let's say investing money in a money market fund or a multi-asset fund, or maybe an ETFs, things like that. So it's the same. Yeah.
Ah, okay.
I love it. I love it when we have a brilliant young girl doing big things. I already feel, I'm trying to think of, now, do I start being a passive investor? Are you doing active? I love it, honestly. It's been a pleasure having you, Lynet, on the TBT podcast. Please tell us, for our viewers, somebody who wants to also come follow your journey, learn from you, learn nuggets, financial, because if there's something that Lynet does with so much faithfulness and consistency is she curates content around financial wellness and wealth.
Yeah.
Okay. So where can they find you, and how can they maybe get in touch? And if they want also to procure your services, you could also just break down for us some of the services that's...
Okay, fine. So primarily the Financial Fitbit consultancy focuses on wealth advisory, yeah? So we help clients grow, manage, protect their wealth, yeah? But for the longest time, we've been not focusing on holistic wealth. So you'll find also we've been missing out on some aspects, yeah? Meaning that if someone wants to start estate planning, we don't offer that, yeah? So if someone wants to start also investing in, let's say, real estate, that has been lacking, yeah? So at the moment, I'm partnering with a law firm to help us also fill that gap. So help people with estate planning, write wills, do all the legal things they need to do when it comes to their wealth, because that is also part of the wealth advisory.
So you're even helping the creation of trust?
Yes, we are doing that.
Love it.
Then I'm also partnering with a realtor.
Yes.
To help people also in the investing in real estate, yeah? Because there's so much that goes around investing in real estate. And I think one of the things is that even when I was sitting with her sometime last week, there's so much that people out here are making money out of real estate, yeah?
Yes.
And there's that knowledge out of that part, like how can I go about it? So we're also trying to introduce through that partnership so that we enable clients to also understand that part, so that we can make a holistic, when it comes to wealth advisory, we are also doing the holistic part. Another service I'm introducing, thanks to Mama Bima here, is the wealth protection aspect, so that you're not only building wealth, but you're also protecting this wealth that you're building. Yeah. So you have the right insurance aspect and risk mitigation aspects in your portfolio. Yeah. And also helping the client to understand these insurance policies that they are taking. Yeah. So no sugarcoating, telling you it's like this, it's like this. So if something happens, you just know it was written in the policy document, so as to also help them understand, because also interacting with majority of my clients, most of them shy away from insurance. Yeah. And when you sit down and you ask them why, they were like, okay, fine, because I had someone took the same thing and this happens, and then the insurance company did not pay out or something like that. So it's also helping them understand those things so that they're also able to now know what they're getting themselves into. Yeah. Then lastly, another product we are introducing for the next 5 months is we are having in-person financial wellness sessions. So, and one of the things I usually say is that I've been in the industry for the longest time. Yeah. I think people just think I've been here for like a few years.
How many years?
Correct it.
It's 11 years, yeah. I've been 11 years in the industry. And I think one of the things that is missing is that there's so many products that are available in the Kenyan market that people just know the face value out of it, yeah. A few weeks ago, there's someone who asked me if they can be able to trade in bonds in the secondary market. And I told them, yes, they are. Yeah, because also the conversations that were there last year was all about the primary market of bond trading. Yeah, you just go buy a bond in the central bank of Kenya, and you hold the bond for 10 years. I think late last month, there's an article that came out of Business Daily where people are making billions and billions of shillings when investing in them in the secondary market. Even I think last week on Wednesday, the turnover in the bond markets is in billions on a daily basis. So also trying to help people understand that there's this other phase to it. And what I'm trying to do with the in-person sessions is to invite industry experts, because I know these people and I can easily just tell them, hey, come and support me. And they'll be like, yeah. So I'm also trying to have these industry experts come in on board so that people can hear from them. Yeah. Because one of the things I usually say is that there's more that happens on the ground that you actually see. I can tell you to invest in shares, but until you're deep in it, that's when you learn the shares investing. Yeah? So also that is what I'm also trying this last few months of the year, just to have those in-person sessions so that people can also get the knowledge from these people in the industry, and also that they can get to ask them the questions, then they can be able to be answered. Because also you'll find majority of my clients or majority of people in social media will either send me a DM or call me or send me a WhatsApp message. But you see, I always limit my response, because I know if it goes beyond this, I need to charge, yeah? Because yes, I will just tell you the face value, but even at the end of it, I'll be like, okay, there's so much that I need to tell you, but I can't tell you over this phone call, yeah? Because we need a meeting, I need to sit, I need to be able to show you physically. So that is also what I am trying, yeah? To offer those services through the in-person sessions with my clients and having those financial wellness clinics, yeah.
Okay. And lastly, tell us about the game. We did play a very nice game. Yeah.
Yes.
How do we get it?
Oh.
Yeah.
Okay, fine. So not only talking about the game, I have 3 products right now.
Yeah.
I have the financial plan. It's called Plan My Money Financial Journal. That just helps you plan and budget your money. It's also an education one, yeah? So you'll find in different aspects, like we can talk about the retirement part of the financial plan. It also helps you plan for retirement. So there are questions which it will ask you, then you'll sit down and you'll be like, okay, fine, retirement, I also have to think about where I'm supposed to live. Okay, fine, it's gonna cost me this amount. One thing people don't know, healthcare when you're past 60 is very expensive. I was telling someone, it's like you're paying a comprehensive cover for a 4.5 million car. Yeah, and you're each year. And so it's also those things that when you purchase the financial plan, you're able to also understand. So it's more of an educative one as opposed to the normal ones where people just feel. Then we have now the money charts game. So the money charts card game is just a conversation starter card game that helps you have money conversations with your friends and with your family. Then we have another product which is called the Reflective Money Workbook. So the Reflective Money Workbook just helps you set realistic goals. So it's an introspective workbook that contains different aspects: spending, retirement, protection, insurance. So you'll answer those questions. So when you're answering those questions, you're able to also understand that there's this thing that is missing because it's been asked here. Nasina, like from me, I'm saying no. Yeah. So why are you saying no? So it will also help you open your mind to be able to see that I also need this in my financial plan. Yeah. Then we also have a podcast. It's called Get Your Bag Right Podcast, where we have conversations around money. So anything, be it money, we have conversations there. Health, protection, mental health, career, entrepreneurship, because everything revolves around money. Money is just the epicenter. There are all these things. So we also try and have those conversations over on the podcast.
Wow.
Get your bag right.
Get your bag right. Hashtag. You know what, Malik?
Yeah.
It takes me back to how we started today's episode. Financial freedom really isn't about how much you earn. It's how much you're able to keep and how you grow it.
Yeah.
Thank you. That has been quite an episode. Thank you so much. It's good to hear from you and from your story and what you've done. We're grateful for that. Thank you for joining our show today.
Yes.
I've been your host, Malim Toto Mwanza.
And I'm Charlene Kimara. You may call me Mama Bima Kenya.
And until next time,
Stay
insured.